Good morning, welcome to Goodwill. In this video presentation, we will see how we can trade in Mcx crude oil futures and options today. The chart you're seeing is the 7-minute candlestick chart for Mcx crude oil futures. And let us see what happened yesterday. The price opened around 5060. Right after the opening, the market continued its selling to reach near 4960. After that, it took support, again went up till 5060, came down, took support near 5020, went up and closed near 5070. And today's price opening is going to be very critical and important. If the price is opening below 5060, or it is expected to open somewhere within in and around 5060, if it is going to open below 5060, again there are chances that if the price is going to move below 5040, the price can fall down. Or if the price after the opening, even if it is going to open below 5060, if at all it moves above 5080, then it will gain some momentum and push itself towards 5160 and 5200, where near 5200 we expect, within this range we expect the market to have some strong resistance. So it is a very tough zone for crude oil traders. We believe that initially if the price is opening below 5060, you need to go for selling by placing stop above 5080, and then we need to take a little extra bit of risk in reversing our position, so that when the price can move towards 160 and 120, you can go for selling. So this is going to be a strategy at this particular position. So how we can put that in the options market? So as we had mentioned earlier, slowly we are moving into focusing into crude oil Mcx option trading, mainly because of these margin regulations and other advantage you have when you trade in options. For example, let us assume that the price is opening around 5000, below 5050, 60, or in and around 5050, which means that 5050 will be that the money option for this particular contract. Normally in crude oil we could see volume only when the strike price is in whole number, round numbers like 5100, 5000, 4900. We don't get any volume near this break of 50s, 5050, 4950. We don't see any volume. Practically, if you want to buy, if at all the price is moving above 5060 or above 5080, then you can select 5100 call option, which is trading around 138. Maybe by that time you will get around 145. So what is the implication is 145 into 2, which means 290. Why I had multiplied that by 2? See, when you go for little bit of at the money or just near the money, so the delta value is 0.5, which means that if the underlying asset increases by 1 point, the value of the option will increase by 0.5. So we are paying 290, so it means that instead of buying, so the delta is 0.5, instead of buying one lot, if you buy two lot, it is equal to one futures. Okay, so that is our point. So instead of buying one futures contract, you can buy two at the money call option. You can be a buyer, which means that 145 into 2, so you're putting two lots, so it is 290. So the same advantage you can get by paying 2900 rupees as a buyer of option. So if you go and buy the same thing in the futures market, which means that you need to pay the margin of 1.2 lakhs, which comes around 1.2 lakhs. You can take the same exposures what you enjoyed in the futures market with some advantage, and with some great advantage we can say in the options market. So we could see few crude oil traders, they are staying away from the market, saying that it is just because of the margin regulation, but you need to use the alternative routes to continue your trading. So the same holds good if the price is coming below 5040. You can select 5000 strike put option. You can buy two put option, which is equivalent to one futures lot. So If you want to know more about all these technicals, because most of the commodity traders, they don't deal with options market, please go back to our YouTube channel and look for all our educational videos. You will get a clear idea. Please contact us and kindly open trading account with Goodwill. For account opening, you must call to 937 927 and subscribe to our YouTube channel. Take care. Bye.